Hello, everybody. My name is Yaroslav Burchenko. I'm the Chief Market Analyst at Olymp Trade, and I welcome you to today's very interesting video. Today we're going to be talking about the Bill Williams indicators, the Alligator and the Awesome Oscillator, which are very underutilized but very powerful and easy to understand when you're just glancing at a graph. For those of you that trade intraday or swing trade, this is exactly the tools that you can consider adding into your strategy. So you guys, without further ado, let's get started with today's video. So Bill Williams was a trader and a spokesperson for trading. He was also an educator in the sphere of trading. He traded commodities, stocks, indexes, and has a combined total experience of over 60 years. So this gentleman knows what he's talking about. He was considered to be the forefather of modern trading psychology, and he combined it with technical analysis to reach new levels. He also pioneered the chaos theory in the trading realm and basically dominated the commodity and stock market during his trading time. Now, one of the things that he used to talk about constantly was that you shouldn't stare at the graphs all day, every day. If you know what you're doing, if you have the right tools, excuse me, then it should only take you 10 to 15 minutes. And so what I'm going to teach you today is to position trade and to quickly scan the graphs for a trade entry. And I'm going to give you guys the tools on how to do that. So let's start with the Awesome Oscillator. It is right here at the bottom of the graph that you guys see here. So it is a histogram, and it shows us what is driving the market, what kind of force, buyers or sellers, in the present moment. The math behind it is right here. We take a 32 period moving average, the high and the low, and then we divide that by 2, and then we subtract that from that a 5 period moving average, which is also divided by 2 with the highs and the lows. So quite simple but quite effective, and I'll teach you guys how to use it right now. So it can be, you can use it as a line graph or a bar graph, which I have down here, and basically there's green and red lines, and they are above or below the zero line. So that's what you need to pay attention to, is the zero lines. Anytime there's a green bar, there's a rise in price, even if it's inside of a red candle. And every time there's a red bar, then obviously we're falling. I recommend combining the Awesome Oscillator with other indicators, and to trade in a direction of a price, you need to combine it with trend indicators. If you're trending within a flat, then of course oscillators. Let me give you the trade signals that you should watch out for when you're using this indicator. Now, you open a sell trade when we transition from a green bar to a red bar. Right there, right on that difference, is a change of trend. It's a change of momentum. If it appears after a series of green bars, this is the first sign of a reversal. It'll be quicker than your moving averages, your MACDs. This is one of the quicker indicators that we have in our trader's arsenal. Now, the Awesome Oscillator, the position where it is below or above the zero line, that will indicate if the trend is likely to reverse and the asset price is going to fall. So right here, we are at the top. There was a change in trend, a change in momentum, and we fell. Here we have from the red bars. Oh, you guys can't see that. Let me show you another example. Another sell trade is when we, excuse me, is when we cross over the zero line. Does that make sense? There's two signals that indicate that prices will fall. A, there's a downtrend on the chart, which we have here after a series of red candles. And then when the Awesome Oscillator crosses over the zero line from top to bottom, that confirms that we are in a bearish trend, and you can open up because there's going to be a few more periods, a few more candles in that direction. Now, what about a buy trade? How do we figure a buy trade? Well, it's actually exactly the opposite. When we have a change from a red trend, a change from a red candle into a green candle, after a series, then this is an indication that price could reverse. Now, when the Awesome Oscillator's position is below or above the zero line, that will also indicate to you where a good entry point will be. But here again, we have confirmation from technical analysis. We have a big engulfing candle that has consumed the previous weeks, or depending on how long that period is, the previous periods completely. So that is another indication that, hey, we're reversing direction. So two signals will give you a good buy trade. There's an uptrend on the chart, and also we transition from the bottom of the zero line over to the top side. So that confirms a bullish trend, and you have a good bullish setup. You can go ahead and trade on those signals. Now, keep in mind, indicators also give us a very important clue: divergence. If there's a big divergence between what price is doing and what the oscillator is doing, remember that price sometimes lies. We have false breakouts, we have false movements, and so the indicator in this example is giving us a bearish divergence. Price keeps climbing up, yet slowly, and then the divergence appears as the Awesome Oscillator goes down. And so when we see this, it is very likely that that trend that looks very weak is going to reverse. If the oscillator moves downward and then the chart moves upward, the price may reverse and start to fall. This is called bearish divergence. So another thing that Bill Williams recommended is that you don't trade in general less than on a 5-minute chart. So I know there's some of you hot shots out there that do really well on a 1-minute chart, on a 30-second chart. That may be well, but that's a very unique skill. Majority of people cannot trade below a 5-minute chart, and there's no reason you should. We have 5-minute candles that give us information about the 5 minutes, the last 5 minutes. That is enough information to use indicators. So that's why we don't recommend trading on anything below 5 minutes. Now, here's another indicator that I want to share with you guys from the Bill Williams arsenal. It is called the alligator. Now, it looks like on the graph, you can see I have 3 lines, yet I have one indicator open, and that's the alligator indicator. And it is basically a smooth moving average, a combination of those. And the way that they interact with each other shows us, again, the strength and the dedication of a certain move. Now, the moving averages that are used in this indicator are 5, 18, and 13, and they all happen to be Fibonacci numbers. So for those of you that use Fibonacci retracements in your trading, and you all should be, the alligator falls into that category of wavelength measurement. Now, when we talk about the alligator, the signals that it gives are usually pertain to what an alligator can do. It can sleep, it can eat, or it can be full. Now, let's start with the blue line, the jaw line. It's the biggest moving average. It's a 13 simple moving average, and it is smoothed by 8 bars on subsequent values. The teeth are the red line, and it's an 8-bar moving average, and then the lips are a green line with a 5-bar moving average. The only thing that you guys need to remember is the way that they interact. Let's get into that. You can use this indicator in any market. You can use it for stocks or for forex or for commodities, and it can be used on any time frame. This makes it a golden tool because you can put it up on your graph and leave it there and use it when you're checking out the daily graph, the weekly graph, or the hourly graph. So it's one of those all-encompassing indicators. Now, here are the signals. When the lips cross down through the other lines, the green line is the lips, and it crossed down through the red line and through the blue line, this signals a short selling opportunity. So just like how we use moving averages across of the quicker moving line over the longer moving line is a signal of a change of trend. You guys are catching on? So we have a sell when the quicker moving average line, and here you guys can see it right here. It has a 5. I know it might be hard for you guys to see, but they're color coded and number coded. So you can see that the quicker one crossed over the ones, the longer ones. That's a short opportunity. And if it crosses from bottom to top, that's a buying opportunity. This is just a golden cross of the moving averages, we can call it. Mr. Williams refers it to as the downward cross when the alligator is sleeping, or an upward cross when the alligator is awakening. Probably good for students to remember, so he uses that kind of animal language. Now, the 3 lines stretched apart and moving higher or lower indicate a trending period. So here you guys can see that the mouth opened, the alligator fell asleep with the mouth open. Anyways, the mouth is open, and now they are moving farther and farther apart in this little period of a few weeks. This is the daily graph. So 3 lines stretching apart, moving higher, lower, means that your positions that you opened should be maintained. It means that you got into a good position, the market is moving in your direction, you can keep that position open. This is referred to as the alligator eating with its mouth open. Now, moving on, if the indicator lines converge and narrow and come together again in a horizontal direction, that means that the period of trend has come to an end. So it's a good time to take profits and kind of shift your positions. This indicates that the alligator is satiated and that the market has finished moving. The indicator can sometimes give you false positives when the lines are crisscrossing with each other repeatedly. What should you know during this period? You guys can barely see it there, but the lines down here in the graph, they are coming closer and closer together and then intertwining like this. That means that there's choppy market conditions. That means that the volatility is very high and it's very hard to judge where the spike will lead to. So you want to buy low and sell high in times like that, but it's hard to open long-lasting positions to get that really sizable income from your positions. So according to Bill Williams, this is the time that the alligator is sleeping and you should remain on the sidelines until it wakes up again. This is one of the drawbacks of the indicator because it gives you the positions very rarely. And there are many false signals which you guys have to unfortunately find out yourself. The market remains trending for about 30% of the year. So the other times, it's kind of difficult to find your entry points, and so other indicators like oscillators will help you better to gauge when we have a shift in trend, shift in dynamic. Sometimes we may have more losing trades than winners, but our winners are so much larger that our profits continue to accrue. So what Bill Williams is saying there is that it's all right to have a lot of little losses, but you need to have a trading strategy and a way of trading that when you are correct, when you are right with your entry, that the position grows so large that it covers not only your losses, but also your needs and your expenses. So keep in mind that you want to trade as compact as possible, getting out of losers as fast as possible, and staying in your winners as long as possible. Let's have a look at the graph, see how we can plot this indicator and how it looks on the Olymp Trade platform. So here we have the FTSE 100 on a 30-minute graph. I'm going to put it up to the 1 hour. And all you need to do to open up these two indicators, here we have trend indicators, and we're going to put in our So here's the Awesome Oscillator. Here it opens up on the bottom for me. And the alligator is right here in trend indicators. So with two simple indicators on our graph, we now have a trending indicator which shows us trend and powerful moving averages, part of the Fibonacci sequence. And we have an oscillator that not only shows us when there's a major trend change when we flip over the zero line, but also when the bears or bulls are in power, when we have their color coded by green and orange. So very powerful tools, and you guys can see that the entry point, so somewhere around here when we have a change, when we have a cross of the quicker moving average over the longer period moving averages and a change in the Awesome Oscillator to the upside, again, they are giving us different signals. So maybe this is a difficult asset to trade. Right now there's no obvious signals. Let's continue looking. Maybe we can have right here with the NASDAQ. So the NASDAQ actually opened up really chaotically today. When the market opened, but before the market opened, the futures contracts, they were relatively flat, and then we had a cross of the zero line right around here, and then just a few periods later, a few hours later, we had crosses of the alligator lines and the mouth opens. the mouth open to the downside. So combining with the two indicators and also understanding that the U.S. elections are impacting the U.S. markets, that there's going to be some volatility, uncalled for volatility, and you can take this trade to the downside. So now that you know how to use this indicator, go ahead and practice on a demo account. Make sure that you use back testing when using any kind of new strategy. And I wish you guys good luck trading out there. And together with the Olymp Trade, we hope to see you guys next time. My name is Yaroslav Burchenko, and see you guys later. Peace.